Right now, it is harder than it has been in a long time to find cash flow. With housing prices near all-time highs and interest rates well above 7% as of this recording, the conditions are not as good for cash flow as they've been over the last decade or really up to the last 15 years. But that doesn't mean that it is impossible to find cash flow. It is absolutely still possible to find cash flow. You just need to look at a lot of deals, you need to know where to look, and you need to be able to analyze deals really well to know if any particular property you're looking at can actually deliver a solid cash-on-cash return. In today's video, what we're going to do is break down an actual deal that someone from BiggerPockets sent me. It's in Jacksonville, Florida, and we're going to take a full look at this entire situation. We're going to break down the macroeconomic situation in Jacksonville pretty quickly. Then we're going to look at the housing market and see what conditions are there and if they're ripe for buying. And then we're going to get into this particular deal and run the numbers and see what type of returns, if any, this particular deal can offer. So stick around because the skills and the tools that I'm going to use in this video can really be used across the country in any market to tell if a deal is good or bad for you. Through the course of this video, I'm going to use a couple of different tools and I will make sure to point them out when I'm using them so you can use them for yourself, whether you're investing in Florida or Jacksonville like this video, in the Midwest, in the Northeast, wherever you want to go. Most of those tools are free, which is awesome, but two of the tools that I'm going to use, which are the Deal Analyzer and the Rent Estimator, those are both paid tools for BiggerPockets Pro members only. You can actually try them for free. You can use them 2 times for free. So you can actually follow along with this video if you want and get some practice at running deals yourself. But if you want to use them on an unlimited basis, you do have to become a pro member, which just for watching this video, we will give you a great deal on 20% off just for watching this video. Just use the code INVESTSMART. The link is in the bio when you check out for pro. Again, the code is INVESTSMART. Just go to biggerpockets.com/pro to check it out. All right, with that, let's get into Jacksonville and see what's going on a macroeconomic level. When I'm looking at deals, I really like to start at the broadest level, which to me is what's going on in the economy in the area. And I know sometimes macroeconomics sounds like this complicated subject, but it really does not need to be. We just need to look at a couple basic metrics to understand what's happening. For that, we're going to go over to my little virtual whiteboard here, and I've already pulled all these stats so you don't have to watch me fumbling around, and we could just zoom in on these stats. And so on the left side here, we have the macro data, which is really, I think, helpful to just start to screen the area. One of the things I really like to look at is population because housing prices and rents are really impacted by supply and demand. And population growth is one of the best ways to measure demand and its change over time. And so when we look at the resident population in Jacksonville, which is this blue line here, you can see that it's growing rather rapidly, over the last couple of years, averaging more than 2% per year, which is excellent. You look at the red line, which is the population of the entire United States on average, and you see that it's significantly higher. Last year, the estimated population growth in the US was about 0.5%. So in Jacksonville, it's growing about 4 times the national average. So that bodes really well for real estate property values. Let's keep going and go down to look at unemployment rate. Obviously, if you're going to invest, you want the economy to be strong. Unemployment rate is a good measurement of one, future growth potential for housing prices, but also vacancy, rent payments, rent growth, all those types of things. When I look at this unemployment rate, I'm looking at the rate of change from a year ago. I just want to see, because of what's going on in the economy, whether it's going up, going down, and it is going up a little bit, which is sort of to be expected during this higher, rising interest rate environment. But it is about keeping pace with the rest of the US average, which to me is a good sign. The last thing I'll look at here from macroeconomic perspective is just income, because income, again, that helps you understand, are people going to be able to afford the rents that you need to collect on a rental property? Will rent grow? Will property prices go up? And what we can see here again is that Jacksonville, this time is in blue. Sorry, I switched those by accident. It's a bit lower than the US national average, which is not super surprising, but is something to note, but it's not really concerning because if you look at the trend here, you see that prices, that income are really going up. And the reason, just so you know, I'm not super concerned is that the median home price in Jacksonville is well below the national average. So seeing the income below the national average sort of goes with the entire vibe and economic situation of the area. So not super concerning to me. All right, so that was the first step, looking at the macro. Step number 2, we're going to look at housing market stats. So the difference here is macro is sort of these like broad trends that span beyond housing and real estate. When we look at housing market trends, we want to see what is likely to happen sort of in the short term, the next 6 to 12 months, maybe, how would I bid on a property? And so I'm going to show you 4 metrics that I think are important here when doing our deal analysis. First is the median sale price. You can see that the median sale price in Jacksonville is definitely still down from its peaks in 2022, but is trending back upward, which happens with seasonal, but it is down. So that is important to know that there are a lot of markets in the US that didn't really fall at all or have kept growing or have rebounded. Jacksonville, not one of those, which is something to note, but I wouldn't be too concerned about because that is representative of a broader trend. You can see that inventory, which is right here, all homes for sale, did spike up from pandemic lows, but has come back down and is still well below pre-pandemic levels. That to me indicates that it is a seller's market and there are going to be competitive offers on most deals that I'm going to do in that area. Same thing goes for median days on market. You see that days on market shot up when interest rates went up. Notably, they went higher than they were pre-pandemic, which is a really important factor to consider because pre-pandemic things were going up, but they were not going up nearly as fast. And if days on market were higher than they were pre-pandemic, that is a red flag, but it has come back down. So overall, what you see is that Jacksonville down from pandemic highs, moderating housing market. But the picture about which direction housing prices in Jacksonville are going, to me, is a little bit murky. There's not sort of a clear picture from this data which direction it's going to go. That's not that surprising, again, because the whole economy is very uncertain right now. The last thing when I was doing this research before the video, I found interesting is this stat called the average sale to list percentage. And this basically measures, sellers can put their house on the market for whatever they want, and whatever them and their agent agree on. But what the property actually sells for obviously comes down to what the buyer and the seller can agree upon. And this shows what percentage of the seller's asking price is the final sale price. And you can see it's below 100% for Jacksonville. It's actually below 98%, which is well below the national average and indicates that sellers have unrealistic expectations right now. I think that's another theme that we see throughout the country right now. But it also means that you can probably bid under asking because on average in Jacksonville, sellers are accepting prices 2% lower than what they're asking for. So that's going to be important when we move on to step 3 in just a second, which is deal analysis. So overall, what I'm seeing is Jacksonville has a strong long-term potential. There's good population growth. There's a good economy, but the short-term picture is a little bit murky. And so when I'm going into this third step, which is the deal analysis part, I'm thinking that I like Jacksonville long term, but because the picture is a little bit murky, I would want to try and buy under asking price to protect myself in case prices fall another 2-3% over the next year or two. I'm not saying that will definitely happen, but since this is a market I don't know particularly well, that is sort of what's going through my head right now. So let's get into the deal. The deal that was sent to me is this market on Springtree Road in Jacksonville, Florida. It is on the market for $300,000. It's a 3-bed, 2-bath, about 1,800 square feet, and the projected rent is $2,000. Now, the current rent is only $1,500, so that's already something that we're going to have to come back to in a minute and see what that real rent is, because I don't really know why current rent is $1,500 and this broker is saying that the projected rent is $2,000, but we'll get into that in just a minute. So what we need to do to actually understand if this property will or will not cash flow is get into our deal calculator. You can do this again if you want to follow along. Just go to BiggerPockets.com and under this tool section you can go to rental property. Just click on this and then you can do start a new report. All right, so what I'm going to do is first things first, I'm just going to add the property address. So I'm literally just going to copy and paste this. Bear with me here. There we go. So we can do that. We're importing some property data here using the calculators. It's going to grab like taxes. I'll show you. It's actually estimates your rent for you, which is super cool. But first, I just want to add a photo because I do a lot of these things and I just want to remember what this one looks like. I grabbed this before, but so this is the photo of the front of the house in Jacksonville. So I'm going to just add this up and here we go. So we've already done this purchase info. We're going to go to the purchase. So purchase price, let's assume for now, it is $300,000 because that's what it's on the asking. That's asking for. And our closing costs, I'm going to put $4,500. Closing costs are usually about 1% to 2%. If you are unfamiliar with this type of deal analysis, when you're using these calculators, there's all these little help buttons. Just click on them. It will show you exactly what you need to do. Or like not exactly, it will show you roughly what you need to do. A better way to describe it. So it shows you typical closing costs, 1% to 2%. If you're unsure, 1.5%. So when you're analyzing deals, like I recommend to people, this is another topic altogether, analyzing deals a lot. I do it even when I'm not intending to buy because it helps me keep tabs on the market, what I could invest, should I sell one home and buy a new one? I think it helps provide useful benchmarks. But anyway, if you're doing these a lot, you want to be able to do them quickly. And for me, I don't know the exact closing cost, but that's okay. I know it's about going to be probably between $4,000 and $5,000. If I start acting on this deal, negotiating with the seller, I will get, exact specific numbers and plug them into this calculator. So just wanted to explain that. Okay, for rehabbing this property, I'm not going to do this because this says that it is a well-maintained property. It says, it has new solar panels. We can look at some of the pictures here. Nice big washer dryer. You could see carpet. It looks like a pretty nice house to me. You might, it's not super updated, but I think you could definitely rent this out as is. So let's just, for the sake of this video, do that. So we're not going to do that. So next, loan details. As an investor, you usually have to put 25% down. So I'm going to do that. Interest rates right now are about 7.4%. We're recording this on a high interest rate day. Everything's high this day, but it's like one of the highest it's been all year. So we're going to do a 7.4%. Points charged is 0. Loan term 30 years. We're going to do that's like a pretty standard investor loan. Next, income. See, we're flying right through this. Okay, so remember when we talked earlier about rents, we were between $1,500 and $2,000 for rents. BiggerPockets, we have a rent estimator tool. It uses an algorithm and comps to figure out rent, and it believes that our rent is $1,687, right? So that's right in between those two numbers, but let's just see where this is pulling from. So I just clicked on this view rent estimate thing here. And you can see 1690, and you can see that the confidence is very high. And I really like that about this. Actually, this just happens to be very high. Sometimes you'll run this and the confidence is low, which is disappointing, but I really like that because, you obviously don't want to act on an algorithm that doesn't feel accurate. We actually go out of the way to tell you whether or not we have confidence in our score. And so this one, they feel pretty confident about that it's 1,700. But if you want to, you can go in and look at some of these different deals. So you can see another comp nearby. That's a 3-bed, 2-bath. It's a little bit smaller, but it's very close by. And so that's 1,760. So actually a little bit higher. Another one that's a little bit smaller at about 1,700. Another one, 3-bed, 2-bath. So it is possible that maybe 1,700 or 1,800 is right because we're seeing a lot of similar price properties. For now, I'm going to, if you can go look at some of these details here. You can see the details, how big the lot are. So you can do some comping on the rents. But for now, let's just go with 1,700. I'm going to round up from 1,687. Let's say 1,700 and go down to expenses. So the BiggerPockets calculator, one of the things that's great about it is it pulled in property taxes. These are the exact property taxes for last year. And insurance in Florida has been going up a lot. Actually, insurance in Florida went up 40% last year, which is nuts. It usually takes like 20 years to go up 40%. So it went up a lot. So I'm going to estimate 2,400 for this area. And we're going right along. Repairs and maintenance. This place is a little bit dated, so I would think I would need about 8% of my income for expenses. Vacancy, I always do 8%. That's about 1 month of vacancy per year. Capital expenditures. Capital expenditures, if you don't know, this is kind of like repairs and maintenance, but it's for bigger stuff like a roof, furnace, HVAC system, whatever. this place looks relatively well maintained, but you never know. So I'm going to put 5%. Just, you got to keep that money aside in case those big expenses come up. And management fees. Personally, I don't live in Jacksonville, so I'm going to have to pay someone about 8% to do that. That's it. This is a single family home. So I would assume that tenants would pay their own electricity, their own gas, water, sewer. There's no HOA fees, no garbage, and we're done, guys. That was it. I'm trying to explain this to you, but clearly you can see that this is relatively easy to do if you get a couple reps in and learn how to analyze these deals. So all I'm going to do is hit finish analysis. And here we go. Oh my God, this is a terrible deal. All right. So never mind. I should just end the video here. All right. So the monthly cash flow, negative $722 a month. That is atrocious. You can see that the expenses are well above the income. Even if that rent estimate was right and that you could get $2,000 a month, which I'm skeptical of, but even if that were correct, you would still lose about $400 a month on this deal. So unfortunately, this one's not going to work out for us. If you want to mess around with it, you can. It's one of the things I like about this calculator. Like, let's just see. We're here. So what if we could talk this seller down and say, you're crazy. We can only buy this for $250. Okay, so now we're only losing $470 a month. So this is not going to work, right? Even if you went all the way down to $225, you're still losing money. I don't think the seller is going to go that low. Even if you got them, let's say maybe they do a buy down to 6%, buy you down to 6%, you're still losing money. This deal is just a no-go. So I think, obviously it's disappointing, but I started this video by explaining that it's difficult to find cash flow right now. And this is a good example. But you can't expect every deal you run to be a winner. Like if it was that easy, everyone would be doing this. My recommendation, particularly in a market like this, is to find markets that offer a good chance of cash flow. Jacksonville is actually one of them. A lot of them are in the Southeast. A lot of them are in the Midwest. And you can find places where there's a good chance of cash flow. Then once you find a good chance of cash flow, run a lot of deals, run 10 deals, run 20 deals, run 30 deals, and see if you can find an above average deal. Like if you start going and see everyone is 2% cash on cash return, 2%, it's better than nothing, but that's not a deal I would do personally. I want to see 4 or 5% at least and some upside for appreciation. So if you run enough deals, you'll be able to know what the average in that area is. And then when you come across that one that's worth buying, once you find that 7% or 8% cash on cash return deal, you'll be ready to pounce because you'll have enough experience and context to say, I've run 20 deals and most of them are 2%. This one's 6% and I trust my numbers. I'm using this calculator. I know that my numbers are correct and this is above average deal. That to me is when you get a lot of confidence and to jump in on a particular deal. So that is why I am always analyzing deals. And although it's annoying that we looked at this one deal and it's negative cash on cash return, I think that's fine, right? I mean, this is real estate investing, right? It's looking at deals. Every experienced investor, even in good markets, you look at 100 deals to buy one. That is just how it works. It is very, very much a numbers game. And using these tools, like doing the macro analysis, looking at the housing market, running your deals, getting your estimated rents right is what's going to give you the confidence to ultimately purchase a deal when you find that really good one. So hopefully this has been helpful to you guys. Not everyone's going to be a winner, but I encourage you to practice and get good at deal analysis so that when you do find that winner, you're going to know that your numbers are right, your numbers are cold, and you can execute on it. If you guys want to use the tools that I use, so let me just go back to that whiteboard here. So if you want this macroeconomic data, this just comes from the Fred website. You can see it up here on the left. It's the Federal Reserve Bank of St. Louis. You can see fred.stlouisfed.org. You just Google Fred website. They aggregate tons of macroeconomic data. You can find it for almost any metro area in the country for free, super easy to use. I actually really like Redfin for housing market stats. They have this thing called the data center. You could just Google Redfin data center, look up your market, and you can find all of this data completely for free. If you want to use the rent estimator and the calculator that I was showing you, you can use them for free twice just to get a sense for them and see if you like them. But if you do want to use them on an ongoing basis and run a lot of deals, as I recommend, you do need to become a BiggerPockets Pro member. Being a Pro member has all sorts of benefits, obviously the calculator, but we also give you landlord forums, you get access to our boot camps, and tons of other perks that you can learn about if you go to biggerpockets.com/pro. Not going to get into all that here, but if you do wind up going pro, don't forget to use the code INVESTSMART when you check out. You can just go to biggerpockets.com/pro, learn all about it, but don't forget to use that code because you're going to get 20% off an already very good deal. All right, thank you all so much for watching. I hope you learned something from this video, and I will see you next week for another data-driven look into real estate investing.